Finovasta. Finance. Innovation. Wealth.
Today, we are literally starting from scratch. We're breaking down a complete beginner's guide to building a financial safety net from absolute zero. Look, if you've ever felt completely overwhelmed by the very idea of saving, or you're sitting there thinking it's just impossible with your current budget, well, take a breath, because you are exactly where you need to be. We're going to build your financial confidence step by step. Okay, let's dive into this. Imagine for a second. Just play along with me here. If your car broke down tomorrow, or, you suddenly got hit with a huge medical bill, exactly how would you pay for it? It's a highly stressful thought for most of us, right? But these unpredictable, really painful moments are exactly why we're looking at the ultimate tool for financial peace of mind today. The stakes are definitely high, but I promise you, the solution is surprisingly simple. And hey, don't worry, we're not going to get bogged down in complicated financial jargon. This explainer is going to give you a highly structured, finite roadmap so you can get this handled without feeling overwhelmed. Here's our map for today. We'll cover the ultimate financial shield, calculating your magic number, the stepping stone strategy, funding your safety net, and finally, when to break the glass. Let's get to it. All right, moving right into part one, the ultimate financial shield. This is all about breaking the cycle of unexpected debt. We really need to reframe how we think about an emergency fund. Honestly, it isn't a burden on your monthly budget. It's a literal shield protecting your everyday life. So what exactly are we building here? Well, it's strictly defined as money set aside specifically for unexpected and necessary expenses. And that necessary part, absolutely vital. I need to be explicit here. This is not your vacation fund. It's not for a weekend shopping spree, and it's definitely not for planned entertainment. It's your dedicated, untouched financial cushion for when life throws a massive wrench on your plans. And this brilliantly illustrates the real magic of the shield. Think about it. Without savings, an unexpected expense pops up, and that leads directly to swiping high-interest credit cards, which means even less money for your future. It's just a stressful chain reaction of debt. But with a savings shield, the expense happens, you use the fund, you cover the problem, and you calmly rebuild. It's a totally calm, structured cycle. Which brings us to section 2, calculating your magic number, where we figure out your true baseline. Now that we know why we need it, we have to figure out exactly how much to save to hit our target. We do this by separating our absolute needs from our wants. As you can see, we split these into essentials, like your housing, utilities, groceries, transportation, and minimum debt payments, versus discretionary fluff. Restaurants, vacations, luxury items, and those non-essential subscriptions we all forget about. When calculating your emergency fund target, you strictly focus on the essentials. Your target number should be based solely on maintaining your baseline lifestyle, nothing more. So let's put some real math to this, based on a great example from our source text. Let's say your essential expenses from that previous breakdown add up to $1,750 a month. A standard 3-month target emergency fund would then be $5,250. Now, I know what you might be thinking. Wow, that is a massive number. But take a deep breath. I want to reassure you right now, you absolutely do not need to come up with this all at once. No way. That's why we have section 3, this stepping stone strategy. We're climbing the mountain one base camp at a time. I totally get that saving thousands of dollars sounds virtually impossible when you're starting from absolute zero. So the crucial point here is that we're going to break this massive goal down into a highly achievable milestone approach. Basically, think of these as levels in a video game that you just need to beat. Step 1, save your first $100. That's it. That creates your first mini financial buffer. Once you beat that level, aim for step 2, reach $500. Then you move to step 3, which is saving 1 full month of expenses. Step 4 is building up to 3 months. And finally, the boss level, step 5, targeting that complete 3 to 6 month fund. The source emphasizes a deeply comforting mantra here. Your fund does not need to be perfect immediately. A small emergency fund is infinitely better than having no emergency fund at all. Moving on to section 4, funding your safety net. Let's look at some practical ways to actually find the cash. Okay, having a milestone strategy is great, but let's pivot to the action plan. Because let's be real, the biggest question you probably have right now is, where do I actually find this money to save in the first place? Well, here are some highly actionable tips to generate that cash right now. First up, automate a small amount, even just $25 to $100 a month. Next, ruthlessly cut out unused streaming services or those gym memberships you never use. Try to reduce expensive takeout and delivery fees. Utilize windfalls like a work bonus or a tax refund if you get one. Or maybe try a 30-day savings sprint where you literally pause all non-essential spending for just 1 month. Keep this in mind. Simply cutting $50 a month equals $600 a year. You really don't necessarily need a raise to start saving. You just need to find the little leaks in your current budget. And this brings us to the absolute secret to automation. Usually people do income, then spending, and whatever's magically left over becomes savings. But if you wait to see what's left, well, you know how it goes. There is usually nothing left. By flipping the formula to income, then savings, then spending, you're paying your emergency fund first. It basically guarantees your safety net grows before your everyday expenses have a chance to eat away at your paycheck. It's a real game changer. All right, our final section. Section 5, when to break the glass. These are your rules of engagement. You're going to work incredibly hard to build this safety net, right? And the absolute easiest way to accidentally sabotage all your hard work is by treating every minor surprise expense as a true emergency. I want you to really internalize this question. Is this a real emergency? Consider this your mental pause button. Before you even think about transferring money out of that savings account, you need to stop, take a breath, and ask yourself this question to protect your savings from your own impulses. To answer that, the source text details this fantastic 3-part litmus test. Step 1, is it unexpected? Step 2, is it necessary? Step 3, is it urgent? Think about a broken water heater literally flooding your floor. Is it unexpected? Yep. Necessary to fix? Yes. Urgent? Absolutely. That is a real emergency. Now, think about a sudden, amazing, once-in-a-lifetime deal on a vacation. It's unexpected, sure, but is it necessary or urgent? Definitely not. No way. That is not an emergency. Now, what's really interesting about this slide is how vital it is to compartmentalize our money so we don't get confused. Your emergency fund is strictly for safety and the unexpected, so it must be kept highly liquid, meaning easy to access in a safe bank account. Contrast that with a sinking fund, which is for planned, periodic expenses, things like holiday gifts or car maintenance that you know for a fact are coming. And finally, investments. Those are for long-term growth and they carry market risk. You never, ever put your emergency cash in the stock market. Because think about it, if the market crashes the exact same week you lose your job, your entire safety net just vanishes. Also, here is a critical mindset shift. If you actually spend the money in your fund for a real emergency, you need to validate that as a massive success, not a failure. Seriously, you didn't fail. You did exactly what the fund was designed to do. You protected yourself. But as the text reminds us, once the emergency is handled, you have to return to your savings contributions immediately to refill that gap. You need to make rebuilding it your top priority. This brings us to a perfect, empowering wrap-up from our source material. Quote, "Start before you think you are ready. It is designed to protect the progress you are already making. You really don't need a perfect budget or a massive salary to begin. You just need to start. Your emergency fund isn't there to make you rich. It is there to keep you secure so you can actually build wealth over time." So I'm going to leave you with this provocative thought. What is one small luxury you can cut today to fund your first $100 step tomorrow? Because the best time to build your shield is way before the battle begins.